This is not the time right now to be doing the real estate, this and that, and be doing 5, 6, 7, 8 other things. Hey guys, this is Martin Perdomo, the Elite Strategist, your host of Latinos in Real Estate Investing podcast, where individuals just like you come to learn how to create wealth through real estate investing. And in this episode, I'm going to share with you why you shouldn't panic even though interest rates are going up. The other day, I had an appraiser come to my office here. We are in the middle of purchasing a triplex here close to my office in town. And I'm engaging him and I'm saying, hey, what do you think it's going to come in at? He's like, Martin, here's what I'm thinking. And I'm looking through the comps and I see a comp on Ransbury. And I'm like, oh, Jeff, I bought my first investment close to here. I look at this comp is now worth, for a duplex, a couple doors down from mine, was $385,000. 15 years later, from 2007 to 2022, that property had created $110,000 in equity. Here's a challenge. In 2009, when it went $100,000 underwater, I was panicked. You want to know why? Stay till the end, I'll tell you why. As mortgage rates rise, it becomes more expensive to finance a home purchase. This leaves many home buyers with lower budgets. Could house prices drop as a result? Well, common wisdom tells us that if interest rates go up, affordability goes down because the cost of money goes up, and therefore people's jobs are probably not keeping up at the pace that the interest rates are going up. Therefore, mortgage payments are higher and people now qualify for less of a house. So that means properties have to drop, right? Sellers have to drop their prices in order to sell their properties to accommodate the buyers based on the interest rates. We're going to look at historical data, what effects interest rates going up has had on prices decelerating and declining. Mortgage rates decrease, house prices increase. And this was between May of 21 to 21. Increases are associated with periods when the Federal Reserve is raising its policy rate to respond to inflation that is higher than desired. Often, this coincides with strong economic growth, low unemployment, rising wages, which can strengthen home prices. Sounds familiar, right? That's what's happening right now. That's what low unemployment rate, we have wage growth, all of these wonderful things in our economy that's pushing inflation through the roof. It's been good. And now consumers are getting hurt because inflation is too high and the feds have to try to control inflation by increasing the cost of money, monetary tightening, so that businesses can bring down the cost of goods and services by decreasing demand. So here's what it comes down to, guys. 2007, I purchased that property for $275,000. 2009, my property was worth $175,000. By 2022, that property now this year would be worth $385,000. The point and matter is, as investors, as leaders, we need to be all thinking in terms of long term. There's an old adage in real estate and in investing. Don't wait to buy real estate and wait. Remember, you make your money when you buy. When I was in that moment in 2009 and I was $100,000 underwater, I was about 28 years old, 29 years old. And I remember thinking, because I didn't have financial education, it's going to take me 30 years. I'm going to be 59. I'm kind of tied down to this. It's going to take me forever to pay this property off. I don't know how, when, and how I'm going to get this done. I felt stuck. However, if I trained myself to look at the long picture, had I studied, had I looked at the data, had I been looking at history of real estate over time, always wins, right? If you just buy the assets and hold them over time, you will be okay. And I want to tell you today that you will be okay. If you're new and coming into this business now, I'm telling you, this is an exciting time to come. And if you're a veteran and you're watching or listening to this video, you should be excited, right? Because you have the skill set, you have the mindset, right? But there's going to be even more opportunity because most people are panicking right now with what's going on in this market. And my advice to you is don't panic, stay calm. And think in terms of 5 years, 10 years, 20 years. Most people overestimate what they can do in a year, but they underestimate what they could do in 5 years. Stay disciplined, stay with it, right? Stay focused, stay on the one thing. This is not the time right now to be doing the real estate, this and that, and be doing 5, 6, 7, 8 other things. Focus on the one thing. right? The winners at the end of this are going to be the ones that are experts at what they do. Stay focused, guys. I appreciate you guys watching and listening to this podcast. If you appreciate this content, give us a thumbs up, like it, and share it. Let's unpack this. Let's talk about it in the comments. Tell me what you think. I want to get your perspective on it. This is an interesting perspective, right? I'm not suggesting that this is what's going to happen. This is what the data is showing over a 30-year period. And I think it's just data and good information to consider. What I will, again, reinforce and remind you is stay focused in your long-term vision. Guys, appreciate you guys watching. Appreciate you guys listening. Peace out. See you soon. Thank you guys for watching. If you want to continue to watch videos like this one, make sure you click this video right up here. I think you might like it. Also, if you want to learn how to create wealth through real estate investing, make sure you check out my online course. The links to that course is down below, where I share with you how to get your first deal within 60 days. Thank you for watching. And again, peace out.